Okay, welcome back to another video. In this one, I want to be talking about my biggest investment or single investment into one company. So far, as you can see from my portfolio, obviously ignoring all the red and the negative, my pie is about £150, 5% down. And that's just where there's more COVID cases being announced and there's a bit more fear coming into the markets at the moment. But as you can see, a lot of my investments have all been spread out through different companies. They average around 90 to like 150, £200. So my biggest investment so far, before I get onto that, today I did actually receive, you see my notification here, I received a free share of AstraZeneca, and that's from signing up to Trading 212. So if you guys haven't already, do sign up with the link below, and me and you both get a free share up to £100. As you can see this morning, I received AstraZeneca worth 80 quid. So that's a really nice free share to get. So do so if you haven't signed up already. But moving on, my biggest single investment so far has been in the International Airline Group. So I invested into this, I think it was last month. I got in just after the share dilution. So if you guys don't know what that is, International Airline Group, they own like British Airways and stuff. To raise some more funds, they've issued some more shares. And it's called dilution because they had so many in circulation, but when they issue new shares, it means the shares that have already been issued previously lose their value because there's still the same market capitalization, the value of the company stays the same, but there's more shares for people to buy, which means everyone who holds shares, theirs go down because there's more of them to go around. It's like splitting a pie, and obviously if you're splitting it between more people, each person gets less and less. So what they do when they do a dilution, they did offer people who had shareholdings in the company previously, they could get in at a price. So they offered shares to them, previous investors, for 88 pence. As you can see, I got in at 91 pence, £91p and 46 pence. And it's currently gone up to 97p. So as you can see in the last few months, 1 month particularly, that's why I bought it on the dotted line here. And it hasn't gone negative yet. It's peaked at about 18-20%, which was about 108 pence, 107p. But obviously this is a long-term buy. It really reminds me of the 2008 recession, where obviously it was the banking crisis and banks couldn't afford their debts. They had too many loans, people weren't paying them back, they had a lot of bad debt. Their prices just completely plummeted and just hit rock bottom. I kind of see a similar situation in this, the airline and tourism industry. So you pick out good companies that you think will pull through and buy them at a really cheap discounted price. So when all this kind of clears up in 5 to 10 years, and their price should just skyrocket and hopefully reach back to their peak. IAG is a bit different because of the dilution. However, if it had about 600 pence here, dilution, I think it dropped about like 30% of its shares. Anyway, it went from 200 pence to about 88p. So we can say if it drops back a third, if it increases that again, I should be looking at about 300-400 pence per share, which would be a 4 or 5 or 3 or 4 fold increase in my investment in the next 5 to 10 years, which is kind of my goal and my mindset. And not to mention, when it does start to pick up again, they will hopefully go back to paying a dividend. Obviously at the moment it says this dividend yield because that goes on previous data, and obviously haven't updated where it's got. They've cancelled their dividend for obvious reasons. So there's a few other reasons why. Obviously, that kind of sums up the sector as a whole, specifically IAG, where they've done the dilution. But more than that, I think the airlines that IAG holds, such as British Airways, they're really strong companies with really good. Well, for mainly, tourism is all about customer service, and I think when people have been really pissed off this time is because when they booked a ticket or a flight or a vacation and it's been cancelled and they've struggled to get the refund back. So I've had 2 holidays cancelled with British Airways, but they've been fantastic about it. So they're really good from a business point of view, and also from me as a customer point of view, it's worked really well. So the first time I had a trip to Mexico booked, they cancelled that, fine, but they gave me a full refund. I didn't have to contact them about it. They done it within a week. And then I also had Amsterdam booked, and that was actually for a few weeks ago. And obviously we saw this wasn't going to go ahead, so we went to cancel it. But we opted for a gift card, so they're really good with getting your money back or offering a gift card. They're not forcing you to do one or the other, and it's very much down to your choice, which is why I'd recommend going with them again. But also that where we took a gift card, which many other people have been doing, it means that they still have the funds, they still had that money, which is really good for their cash flow, which is why I think they're not as in dire problems as other airlines. So you've heard really bad reviews about EasyJet and Ryanair, and that's because they've just flat out refused to give customers and say, no, we haven't got the funds to give it back to you, so we can't give it to you. And they said, fine, you can go through like a lawsuit and see kind of how far that gets you. Like, we'll get it to you when we get it to you, which is really poor customer service. And in the long term, I really don't think that kind of thing will go, particularly where them low budget airlines, they really depend on high capacity. I think it was something like 90 or 95% of the plane has to be filled for them to like break even, something crazy like that. So where you are charging a premium for customer service, such as the higher end airlines like British Airways, it means that customers are less price sensitive, which means when it kind of picks up again and it's safe to travel, people will be willing to pay that premium and keep the cash flow going, for one, to know that they're safe, but also in good hands in terms of customer service as well, which is why I'm quite confident in IAG to pull through, especially when a vaccine pulls off. I mean, in the airports, they're doing instant testing, so you can get a test at the airport for like 80 quid or something. And once they tested you, you get, I think the results in like within an hour or something crazy like that. So this is producing a lot of confidence, which is why in the last month it has shot up about, like I said, like peaked about 20%, 18%. So that's really nice to see. Another big factor that people think, or people are saying that don't invest in airlines, is because they're saying a lot of revenue and the premium money comes from like traveling business and first class. And they're saying with the move to online, the increase in people using Zoom and Microsoft Teams and stuff, they say business travel just isn't going to be as essential. There's a few reasons I disagree with that. And I was reading on the London Stock Exchange, I was on the IAG forum, and a lot of people arguing the same case and agreeing with me, thinking that business travel won't be dead as a result of COVID. There's several reasons for this, and it comes down to just the quality. If people are making business deals, they need to speak to someone. You know, you're making like millions of pounds or millions of dollars worth of discussions and talks and looking to buy a new product. 9 times out of 10, you're going to go for the person who you have like a strong connection with and you feel you can work well with, and that kind of relationship can't be built like online. The face-to-face has a lot of value still, and I don't think companies are going to risk that, and they're not going to give another company that edge because they don't want to get their employee to travel. And I think when they do have that business travel and it's the refreshed, you feel valued, I think that not only motivates the employee to go well and close the deal, I think it's going to set you apart from the competition in terms of people who are just trying to set up loads of Teams meetings and Skype meetings, and companies aren't going to reflect well with that. So I don't think business travel will die, and I think that will pick up again, and again that will increase their revenues, and that will also counteract the problem of them not having enough cash flow and revenue coming in because of the lower capacity allowed, which hopefully will pass as well with the instant tracking in the airports. So other than IAG, I also did have another big buy with a company called Mitchell and Butler. So this isn't actually I didn't buy them on Trading 212. I bought them on my Hargreaves Lansdown account. And the main reason for that is, the main reason I bought Mitchell and Butler is similar to IAG. It's a hospitality sector. They own companies like Miller and Carter, there you go, Harvester, Toby Carvery. And why I think this has got a bad price, obviously because of the lockdown and people kind of saw the whole industry as a whole going down. But the reason why I particularly think Mitchell and Butler will pull through and is a good buy at the moment, you can see here its price PE ratio is a measly 3.5, which is quite incredible, the value that you can buy right now. And I think these are going to pull through because, for starters, the lockdown now is a lot more eased than what it was, and their curfew is now at 10 p.m. and a lot of their restaurants close at 10 o'clock anyway, so that means that has no revenue impact on them. Secondly, they're not affected by lockdown or people deterred from going to the high street because of the COVID cases, because a lot of their restaurants, they're on like out of town locations where you can drive and park to. So having lower footfall on the high street doesn't really impact them as much. Obviously, they do have some within town centres and high streets, but a lot of them you can drive to, and a lot of people are actually preferring that when they still want to have that and go out and have a nice meal, but they don't want to have the stress of going to the high street, being in a crowded area with the risk of a virus. They want somewhere they can travel to in the comfort of their own car and go there and be looked after in a social distance environment at the moment. So that's why I think that's a really good buy at the moment. But as I was saying about why I bought on Hargreaves Lansdown, because Trading 212 does have the commission free, you don't have to pay any fees when you buy a share. But I decided to go for Hargreaves Lansdown because they offer shareholder benefits. So as you can see here, I made a list on Trading 212 of what offers benefits, what companies offer benefits for shareholders. However, Trading 212 doesn't actually offer these benefits. You have to contact the company separately. So I bought my Mitchell and Butler shares on Hargreaves Lansdown because they do that all for you. And the benefit of that is you only have to buy one share. I bought £300 worth, as you can see here. I'll just get the app up. So I bought £300 worth. They had a £12 fee. I bought around 156p, and as you can see, it's gone up to. So I bought at 136p, and that has just completely shot up to 165. And every year, I think it's December or January, the broker who you buy through, not Trading 212 because they don't offer it, but Hargreaves Lansdown does, you get a discount booklet for all of their restaurants, and I think it goes up to 20% for each restaurant. And like I said, you get that yearly. So you can make your money back on that if you go to the restaurants, which I'm sure a lot of people do. Like I said, Harvester, Carvery, Miller & Carr, All Bar One, they're all really popular companies, which is why I bought it, because I'd make my money back in the shareholder benefits alone. Not to mention, I think it is a good buy and will be going up in value. So yeah, they are my two biggest buys in single companies. Let me know how much you've kind of put into one company, if any at all, or if you're like I was beforehand, and spreading it out across, which is good to diversify. But as you can see at the moment, it's not paying off too well. And the two companies that I did actually go quite big in, IAG and Mitchell and Butler, they're both up about 10% at the moment, which is nice to see. So that's made me feel quite good. So yeah, let me know if you guys have bought any big buys recently, and thanks for watching. I'll catch you guys next time.